There is a direct correlation between the Federal Reserve's balance sheet hitting an all-time high and the S&P and the NASDAQ hitting an all-time high. A couple of weeks ago, I think it was 2-3 weeks ago, the S&P, the NASDAQ hit the all-time high on the same day as the Fed's balance sheet hit an all-time high, right? Like this stuff is correlated. The Fed's balance sheet literally was $900 billion in the global financial crisis. Today, it's $8 trillion. By the end of the year, they think that it's going to hit 9 trillion. That means that they literally are going to 10x the Fed's balance sheet in about 12, 13 years. The S&P and the NASDAQ is no longer about the companies. It is simply about what does the Federal Reserve want to do. Federal Reserve Chairman Jay Powell is the most powerful man in the world because he gets to decide who gets rich and who doesn't. And as long as they continue to manipulate the market by drastically lowering interest rates and keeping them artificially suppressed and pumping liquidity into the market, Jay Powell is deciding that the rich are going to get richer and the poor are going to get poorer. If we allowed the free market to reign and we stopped the manipulation, it would be absolutely catastrophic in the short term. The stock market would fall. There would be tons of folks who really had their portfolios hit. But what it would allow for is a complete correction of the market, and we would wipe out the bad companies, the companies that literally make no sense, and it would allow those resources to flow into better organized, better run businesses that have much more long-term sustainability. We have companies right now on the US public stock market that are literally 15, 16, $20 billion companies that have no product and no revenue. Literally, we have on the US stock market right now the equivalent of shit coins that are trading with $10+ billion valuations, pre-product, pre-revenue, and Wall Street's acting like nobody else can do what they do because they're experts, because this is what's supposed to happen. It's nuts out there.
So I got two wild stats.
All right.
You ready? All right. So these are, these are almost a couple months old at this point, I guess, but they're still probably somewhat relevant or true. So almost 50% of the money the US has ever printed was printed in 2020. In U.S. history.
How much?
50% of the money U.S. has ever printed was printed last year.
That's wild.
Wild. So that's when you see that vertical chart. And then the other one that I think is even crazier is 35% of all U.S. dollars in circulation last December were printed in 2020. 35% out of every dollar in circulation was printed last year.
Listen, we live in unprecedented times. And in unprecedented times, what you're going to get is you're going to get a bifurcation of markets, and it's simply split on an education line, right? The people who realized that you shouldn't fight the Fed and they just got long and shut the hell up and let the Fed do its work made billions of dollars over the last year. If you were sitting there as a value investor and you were saying to yourself, this is way too manipulated, right? This is way overvalued. There's no way this is sustainable. And you sat on the sidelines in cash, you actually lost money over the last 12 months. Now, if markets were allowed to operate the way that they should, and we looked at things like revenue multiples, et cetera, there would be a correction. It's very obvious that we're at a very high percent or kind of a high standpoint in terms of revenue multiples compared to historic comps, et cetera. But they are not going to allow the market to correct. Market corrections have been banned and bear markets have been outlawed. If there is even a sign of any sort of market correction, they are going to step in, they're going to pump liquidity, they're going to keep interest rates low, and they're going to continue to manipulate the market up. At this point, do we start to throw out some of the timeless investing principles that say you have to look at price and things like that? Or do we literally think at some point they will stop, and therefore there'll be that market correction? People will have that value investing to kind of benefit from.
Those investment principles have evolved over time for sure, right? Like you're talking about companies like Uber. Uber doesn't make any money, and they're valued at what?
50 plus billion, probably, maybe 90
Jim
billion.
Cramer is telling you to YOLO into markets.
I love Jim, but here's the thing: it was a great strategy for the last 12 months. Larry Fink, get 100% invested in equities, right? Great strategy over the last 12 months. It's nuts that this is the situation.
So let's play a quick game here. So I said 50% of all U.S. dollars that have ever been printed were printed last year.
Okay.
That fact was I saw that read in December last year, right?
Okay.
What do you think inflation was at that time at the end of last year?
The actual inflation numbers.
Yeah, what they said.
The inflation number was
CPI was.
What they said.
Yeah, the CPI number was probably sub 2%.
Yeah, 1.4%.
Yeah, 1.4% during December. Now all of a sudden we're at 5.4%. Like, life hits you fast.
Yeah, and I'm sure if we pull up quotes, we'll see a bunch of it's going to be okay. Inflation's not here. It's transitory. All this stuff, right?
Last year, so that we don't get gaslit, it's important to remember history. Last year, they told us don't worry about inflation. They said they weren't worried about inflation. They actually even said at some point, various people within the economic machine said that inflation wasn't going to happen. We live in a deflationary environment. The deflationary environment would be able to suck up all the liquidity. Now they're saying it's transitory. Larry Fink says it's not transitory. Steve Mnuchin says it's not transitory. Anthony Pompliano says it's not transitory. Joe Pompliano and John Pompliano say it's not transitory, right?
Facts.
What ends up happening is we're watching the narrative evolve over time, but you now have the front page of the New York Post calling out inflation. It's trending on Twitter. We continue to see over and over and over again that the mainstream media and the incumbents on Wall Street, they are completely misleading people when they say things like, it's okay that they're printing money, right? Go back to just an Economics 101 course. This is the part that just absolutely blows my mind. If we're in an Economics 101 course and I'm the professor and there's a bunch of students there and I say, by the way, the US government is going to order the politicians, who, by the way, the politicians run monetary policy in the US now. The politicians are going to say, we need to expand the Fed's balance sheet. We're going to print trillions of dollars. And then I say to the kids, okay, by the way, nothing's going to happen. Don't worry about it. You'll be fine. You can hold cash. They would literally laugh at me. They would walk out and they'd ask for a refund for class. Right? There's no way that was ever going to be true. But that's what we were told. And it was told that way so that we could have an excuse so that they could do it. I think, Joe, you had a great point earlier when we were talking about this before the show of they handed free money to people and basically said, we're here to save you, right? Here's $1,200. But what they didn't tell them is, by the way, your cost of living is going to explode. And therefore, actually on a net basis, you're going to end up losing rather than winning with the $1,200 we hand you.